everybody in the room knows who we are, but I'm Alfredo Rodriguez. I'm with eXp Realty. My wife, Breonna Rodriguez, is with Fairway Independent Mortgage. And we wanted to start off by just talking about the fact that we believe in homeownership. We think it is one of the core fundamentals to developing generational wealth that you can pass on from generations to generations. And we wanted to start off by kind of sharing our story of how real estate has impacted our lives before we go into the specifics of, the home buying process. So Breonna and I actually got married very young. She was 19 years old, I was 21 years old, and I remember going to ask her dad for his blessing to marry her. And her dad actually was a realtor. But so I went and had a conversation with him. Anybody who knows me, I hate tuna. I think he knew that too because he made me a tuna sandwich and said, "Sit down, let's talk." So I asked for his blessing, and he said, there's two conditions, two things that I would like. One, I would like for you guys to buy a home. Two, I want you to at least wait until Breonna's done with grad school. We did one out of two. We bought a house.
We purchased our first home with a CHAPA down payment assistance loan, as well as some tax incentives that the Obama administration was giving at the time. And I think my dad might have helped us a little bit, but we did have savings. We purchased and did have money saved in the bank to go into our first home buying experience. I remember throughout that process, I really wanted a single family house and it wasn't possible for us. We ended up having to buy a condo. Fast forward years later, I became a mortgage loan officer and I learned that, I had more conversations with my loan officer about how our qualification was structured, we would have been able to qualify for more and possibly get into a single family house because there were single family homes for $100,000 at that time. So that $25,000 difference was the difference between having an HOA payment and not. So those are conversations that we try and have with our clients about how your mortgage payment is structured and how we came up with that mortgage payment, because you're really qualified more on a payment versus a purchase price.
Most definitely. And I think the most important lesson to pull from that is that even though we were hesitant, we had a plan and we got into the game. And when I'm talking to prospective first-time home buyers or people who are on the fence, I'm telling them, get into the game. And getting into the game really paid dividends for us. The equity in that home over the years helped us get into our next home and our next home. Like she said, we bought that house in 2010. We sold it in 2019. She said we bought it for $75,000. We were able to not only pull that equity to make a down payment on our next home, but we sold that house in 2019 for $215,000. $217,000, and we were able to roll that into another property. And we'll kind of talk about that a little bit later on the investment side of things. Mm-hmm. But I think this is a good segue to talk about how do you get into the game and what is the process of purchasing a home.
There's a lot of steps. A lot of times people think, I see a house, I want to buy that house, so I'm going to call a realtor and I'm going to go buy that house. And that's not how it goes. Really the first step is to talk to a mortgage lender, because we don't want you looking at properties that ultimately you can't purchase, you can't qualify for, and making sure that not only you qualify, but you have a strong qualification, meaning the mortgage lender hasn't just done a phone call with you. We've gone over all of your actual paperwork. Maybe if you get bonus and overtime income, or you have weird hours or things like that, they've done a verification of employment. The more you get done up front, the better. So that first step really is getting a pre-qualification done and turning in all of your financial paperwork, taxes, bank statements, pay stubs, retirement accounts. I always like to get savings statements and retirement and asset account statements from everything that you have, even if we're not planning on using it all or even touching some of it, because that can mean the difference between one pre-approval versus $20,000 more, because you're able to show a stronger financial picture the more assets that you have. I was able to help a loan officer in my office get a client approved for $25,000 more a couple weeks ago just by asking for a 401k statement. So that pre-approval is really the first step in the process of purchasing.
And if you're thinking about buying a house, whether it's your first house, your next house, I would highly recommend not only that you have this first appointment with the lender, sit down with your realtor and your lender together. That way everybody's on the same page, you can come up with a plan and you can execute.
And you know, your realtor and your lender are meant to work as a team together. I mean, everybody here knows that Alfredo and I definitely work as a team, but we work for two separate companies. We're not employed by the same company, we're two separate entities, and Alfredo will work with other loan officers, I work with other real estate agents. It's a matter of if everybody's going to come to the table together, because then after you go under contract, you're going to have to turn in earnest money, which is kind of good faith money for the seller to know that you're serious in the purchase of this home, so that they'll take the home off the market for you. So you're going to turn in that earnest money, and there's specific dates and deadlines in the contract that the agent puts together that state how you can lose your earnest money. So making sure that every step of the way gets taken care of. So after you go under contract, you're going to have inspection. You're going to have an appraisal as well. The appraisal is ordered by your mortgage lender, but your mortgage lender doesn't get to pick the appraiser. You also do not get to pick the appraiser.
And in that first meeting, we really want our clients to understand what their payment's going to be and what goes into that payment. So generally your payment is comprised of your monthly principal and interest. You're also going to have escrow to pay your insurance, and you're also going to have escrow to pay your taxes. So one thing that we want our clients to understand is you might have two houses that are $500,000, but based on the taxes in those areas, this $500,000 house might carry a $3,500 payment, but this one might carry a $3,900 payment. So it's really important that our clients understand what makes up a payment, and they understand what their payment's going to be when they're going to purchase a home.
A lot of times when people are buying their first home, they're wanting to know what first-time home buyer programs are available. That's the question we get all the time. The most common one in Colorado is CHFA, the Colorado Housing Finance Authority. And a very little known fact is that you don't have to be a first-time home buyer in order to use CHFA assistance. I've used down payment assistance through CHFA for move-up buyers more than once. So there's a lot of different things that we can do with down payment assistance programs even to help come up with money in order to finance your purchase. With down payment assistance programs, there's generally an origination fee, okay? So there's generally 1% that's added to your costs in your loan. It's been said in the past that interest rates are higher on down payment assistance programs, but honestly, right now, they're so close to what interest rates are in general. If we can qualify you for down payment assistance and it makes financial sense for you in the future, because remember, you have to pay it back. It's no interest, no payments, but if it makes sense to do that, then it might be a good idea to look at that option. One creative thing that I mentioned that I've done is, helping somebody purchase a move-up property with down payment assistance and turn their previous primary residence into a rental property. That is one way that you can become an investor or a landlord and have a rental property, is by turning your primary residence into a rental property.
How does it work in terms of paying for that inspection and things like that? Is that like bundled with the cost that you pay your mortgage and
It is a
real estate?
separate cost.
Or it's
It
a
is a separate cost.
It's optional?
Since we are such a small part of the picture and a much smaller piece of the pie at the end of who you as the buyer are paying, we do take payment at inspection. Sometimes we are happy to roll it into your closing, and you can pay us after closing if you know you're going to get back some money and things are tight. We would prefer to reduce our fee and take a payment at closing.
The cost is going to depend on the size of your house and what extra services you add on. If you're adding the sewer, if you're adding the radon, I would say that on average, an inspection probably would cost anywhere from $500 to $1,000. What would you say? Am I right in there?
I would say our average is about $650 to $750.
The truth is, as a fiduciary, as a financial planner, the first thing is to make sure that the person I'm sitting with has a good understanding of money coming in, money going out. Do they have cash reserves, right? Fiduciarily, that's the most important thing. Because if you have investments, but you don't have savings, once life throws you a curveball, you're gonna dip right into that.
So, I mean, in the news and all over the place, people are hearing that interest rates are going up and interest rates are high and people are scared of buying. So what would you tell somebody about purchasing real estate at a higher interest rate than it was 6 months ago, where the rates are now?
I get that question all the time, whether it's on investments or buying a home. They're like, oh, I'm gonna wait for the markets to get depressed. If you're ready to buy, get in now. I think we were talking about it. I just heard a real estate person say it the other day. You marry the house, you rent the interest rate. Because whatever the interest rates are today, if you can get in, right? Because the interest rates may come down, and that'll be great, you refinance. But if they go up, and maybe they're up 2 or 3 points in a year, 2 years, now you're out of the market. Get in when you can.
People are asking what's going on in the next market because it's going nuts. The last 2 years have gone nuts. We're seeing that people are doing price decreases. That is not a sign that this market is crashing. The market is bouncing out to where it should be. A prime example of that is the fact that I listed 4 houses in the last 4 months. 2 of those houses sold in 2 days. The other 2 houses that did not follow my pricing strategy are pushing 70 days on the market. So to go over median sales price in the Denver area, if we're talking about city and county Denver, prices are going to be much higher, but we're talking about the metro Denver area. In October 2021, a year ago, the median sales price was $495. When we hit kind of the peak of the market in May, the median sales price was $539. But even though that was our peak, we are seeing prices still continue to increase, and the median sales price in the Denver metro area today is $560. The big thing that we have seen change quite a bit though is days on the market. It is taking longer to sell houses because a lot of people are afraid of the interest rates, are afraid of what's going on because they see this as volatility in the market when it's just a correction. So you're seeing less people out buying houses, and it's taking a longer time for people to sell these houses. But there's some advantages to that. And that's where we wanted to get into, our title of this, exactly how to buy a home in today's market.
One thing to keep in mind is that 6, 7, 8 months ago, people were buying homes and liquidating assets to purchase a home, mainly because they know the long-term strength of real estate as an investment, right? But those people, while they were getting interest rates in the high 2s, low 3s, they overpaid for their house. And what I mean by overpaid is that they went in, they put in an offer on a property that was listed at $500,000. And it got to the point that the prices that properties were listed for, that was just the opening bid on auction day, right? And 30 people would go through that house within a few hours, and they would have all these offers by the end of the day, and it was who's willing to put the most skin in the game and say that they will pay over the appraised value the most. And so people would say, I'm willing to pay $50,000 of this person's $70,000, so they go with that.
Not only are you seeing I'm willing to pay $70,000, but my agent's also willing to cut their commission in half, that bring my offer even higher. We were seeing a lot of that happen too.
Things like waiving inspections and not even doing them. I mean, we saw a lot of that. And those things, while those clients have really low interest rates, they're gonna have to be in their home longer because their appraisal came in, it didn't appraise for what they offered, so they had to pony up the cash out of their pocket in order to purchase that home. So now they have this super low interest rate, but they're going to be tied to that house longer to make up that equity, or lose more money to get out of it earlier because they're going to have to bring money to the table when they sell. You don't always make a profit when you sell a house in order to go on to the next thing, right? So now, fast forward to where we are, rates are in the sevens, guys. Like rates are higher, okay? However, with that, you're not having to make a decision on your home in 15 minutes. Sellers are more willing to cater to you as a buyer and work with you on inspection items, give you your time for inspection, not have to limit your inspection to just health and safety items. And they're also doing things like giving sellers concessions. These sellers concessions are going towards things like covering closing costs, buying down your interest rate. There are programs and products out right now called 2-1 buy down. After 2009, 2010, predatory lending was a big thing, and it was always said, don't ever temporarily buy down your interest rate because it's a scam, this and the other. And I know this firsthand because that's how I was trained as a housing counselor, right? So these were the things that we were talking to clients about, but now there's a lot more regulation in the industry for one. Two, there are 2-1 buy downs to benefit the consumer in their mortgage payment. And what these 2-1 buy downs are is it is a temporary reduction in your interest rate. You qualify based on today's interest rate. So if we do just 7.5%, I'm just giving an example. I'm not quoting interest rates to anybody in this room, giving an example. So say the interest rate for your loan is 7.5%. With a 2-1 buy down, we can get your rate down to 5.5% for the first year. Second year it goes to 6.5%, and in the third year is when you would have to start paying that 7.5%, and it's fixed for the life of the loan. So just like Jimmy was talking about, if you purchase now and rates go up, then your rates are at 9%. I don't think that's going to happen, but who the heck knows? Then you're tied to that 7.5%, and you're still in better shape. Or what the majority thinks is going to happen is in the next 3 years, rates are going to come down a little bit. Are we going to see the 2s again? No, we're not. Are we going to see 3s again? Probably not. But I mean, we're probably going to see 4s, 5s. And once that happens, then that 2-1 buy down program gives you time to refinance and get locked into a 30-year fixed rate mortgage for a lower price.
There's a lot of people that we talk to that say, you know what, I just want to wait it out and see if I get to that 4.5% interest rate. But Jimmy said it, and I'm going to say it again, get in the game now, because if you wait for 6 months for us to get to 4.5%, well, what happens is if you buy it now, you locked in today's price. And then you can refinance in 6 months to that 4.5% interest rate. Instead of waiting, you have it owned a home for the next 6 months. You've been paying rent for the last 6 months, plus you're paying whatever that market rate is for homes. And we have seen a continuous increase in homes month to month for the last few years.
And that's really important to take into account because everybody sees, oh, properties are sitting and prices are going down, etc. So I think a lot of consumers are like, well, let's see how far they go down.
Yeah.
But you don't, don't be rooting for prices to go down exponentially, because then we're in a different financial crisis, and that's not good. And the reason rates were so low was because of COVID, and we had this global pandemic. So, like he said, prices and home values have continued to steadily increase. So you're going to wait for that 4%, but that can be the difference between a 3-bedroom, 2-bath home and a 2-bedroom, 1-bath home. So because that is the trend in the market, and Colorado has a really strong real estate market. So getting in with these opportunities right now and being strategic and communicative with the people you're working with is what's really important to make sure you're in good shape.
Just to kind of put an exclamation point on that, I'm having listing agents calling me after showings that I've done. I've had one listing agent call me every week for the last month. Hey, are you guys ready to buy this house yet? They are begging us for an offer. So buyers, it's time for you to get in there. So kind of the blueprint is you want to sit down with a lender, with an agent. You want to know exactly what you need in a home and understand what your payment's gonna be and what your payment can get you. Then it's gonna be your agent's job to identify the area, to find that home. And this is important, you need an agent that's gonna go in and negotiate for you, because sellers are willing to pay you to buy the house in some cases. But they're not just gonna hand that to you. It takes an agent to go out there and get that. We got a house under contract last week. This was the one that Julie helped us out with. The seller paid $10,000 of their closing costs. Yeah, so the land inspection, they're getting a new roof. They're getting some plumbing work done, and they're getting an additional $500 after the $10,000. So we negotiated really hard. And like Breonna was saying, you had people 2 years ago paying $50,000, $60,000, $70,000 over asking price, waiving the inspection, and they're moving into houses that have foundation issues, that have plumbing issues. This is the time to take advantage. So Blueprint is be informed, have a great team, and have an agent that's going to negotiate for you and listen to you.